to my varsity episode. So here we are trying to divide the chapters and try to learn. So in the chapter 2, sorry, just in the chapter 2 we have some 12 pages. So we will split 6 in one episode and 6 in another episode. We will keep this as a start and we'll keep this as an end. Okay. Now let's start with chapter 2. So yeah, of course it's having 9 episodes, then we would divide as 5 and 1 and 4 and 1. Okay, so this would be end and this would be start. The previous 12 episodes I was talking about the first chapter and this is chapter 2. Okay, so let's start. Now we'll go to chapter 1. So what is stock market? So this is the financial regulator and intermediaries. What is stock market? So we are going to learn basics about the stock market. Okay, in the previous chapter, we established that investing in equity is vital to generate inflation beating returns. So this is an important point. So inflation we have to keep in check. Okay, so mostly inflation would be 7% and sometimes it can go to 6 or it can go to 8 also. But the normal range is 7%. Okay, so here they are telling you that we have to do something investment which can beat inflation. Okay, having said that, how do we go about investing in equities? Okay, so now they are into the main point, that is stock market. Okay, before we dwell further into this topic, it is essential to understand these market ecosystem and the many different entities involved in making our capital market journey smooth. Okay, so of course the investment is the major idea. So 30 years you begin working, 50 years you want to take retirement. So it is like the 20 years your investing journey should be very rock solid for you to have a better retirement life. So that's what they are trying to point here. Okay, so let's start here. Unlike a supermarket, I have to start from here. Okay, just like the way we go to the neighborhood kirana store or a supermarket to shop for our daily needs, similarly we go to the stock market to shop, read and transact for investments. Okay, of course stock market is for investment strategies. The stock market is where all the participants who wish to transact in shares go. Okay. Transact means to buy and sell shares in the context of stock market. Okay, so this is simply buying and selling of stocks in the stock market. Okay, and the primary purpose of the stock market is to help you facilitate your transactions. So if you want to buy shares of a company, the stock market helps you meet the seller and vice versa. So this is self-explanatory, very easy to understand. Unlike a supermarket, the stock market does not exist in a brick and mortar form. Of course, it is an electronic form. It exists in electronic form. You can access the stock market electronically from your computer and conduct transactions, that is buy or sell. It is important to note that we can access the stock market via a registered intermediary called a stockbroker, of course. So Angel, Zerodha, Upstocks, Grow. So these are some of the popular stockbrokers available in the market, in Indian market. So we will discuss the stockbrokers at the later point. So they would discuss about all of them in the later point. First they are trying to explain about the stock market for general or in layman terms. Okay. Now, India has two stock exchanges, that is BSE, Bombay Stock Exchange, and then they have NSE, that is National Stock Exchange. Of course, this is the important point to note here. Okay, there were many other exchanges earlier, but none of them survived. Okay, so when you talk about the stock markets in India, you are essentially referring to either BSE or NSE. Old stock exchanges like Bangalore Stock Exchange, Madras Stock Exchange, Calcutta Stock Exchange have either merged with BSE or NSE or shut shop. Okay, so yeah, of course they would have merged with these two, which are very popular in the market now. Now we'll go into the second portion. Okay, market participants and the need to regulate them. Okay, this is something important which NSE and BSE does. So here the stock market attracts individual and corporations from diverse backgrounds. Okay, anyone who transacts in the stock market is called a market participant. The market participant can be classified into various categories. So that is market participant, whoever takes part in the transaction of stocks in the stock market. Domestic retail participants, so that is retail R. Okay, these are people like you and me transacting in market. Then NRI and OCI, these are people of Indian origin but based outside India. Okay, they don't live in India. Domestic institution, these are corporate entities who are in India. Okay, and then domestic asset management companies, they are called as AMC. They are like mutual fund companies like SBI Mutual Fund, HDFC AMC, Edelweiss, ICICI Prudentials, etc. So these are called as domestic asset management companies. And then we have foreign institution investors. Those are non-Indian corporate entities. They could be foreign asset management companies, hedge funds, and others. So technically, there are retail, there are DII, there are FII, who mostly participates in the market. So retail are like us, you and me. Domestic are, of course, corporates in India. These are foreign corporates. Okay, now irrespective of who participates in the market, the agenda for all is to make profitable transaction. Okay, it is a zero-sum game, so we have to be careful. More bluntly put, to make money. Okay, of course everyone are here to make money. When money is involved, human emotions such as greed and fear run high. Of course, one can easily fall prey to these emotions and get involved in unfair practices. That's why there are regulations to regulate this. India has its fair share of such unethical practices. Given this, the stock markets need someone who can set the game rules, commonly referred to as regulation and compliance. Okay, these regulation bodies, sometimes RBI or sometimes NSE and BSE, can be called as regulatory bodies. Okay, and ensure that the people adhere to these regulations and compliance, thereby making the markets a level playing field for everyone. Of course, this is an important point to understand how market regulations are made. Okay, RBI mostly governs the banks, and then this is just an example how NSE and BSE have, or SEBI have a regulation rules for all everyone to play safe. Okay, so here the regulator. Okay, now in India, the stock market regulator is called as the Securities Exchange Board of India, or SEBI. So these people control the market with rules and regulations. Okay, often referred to as SEBI. SEBI aims to promote the development of stock exchanges, protect the interest of retail investors, and regulate market participants and financial intermediaries' activities. In general, SEBI ensures the stock exchange conducts its business fairly. Okay, stockbrokers conduct their businesses fairly. Participants don't get involved in unfair activities. Corporate don't use the market to benefit themselves. Example, Satyam computers. Okay, small investors' interests are protected. Large investors with mega cash piles should not manipulate the market. Overall development of the market. So this is the very important task in the market for SEBI. Okay, so since India is a country of 100 crore population, just a second. India is a population of 100 crore population. Now imagine these people try to have participated in the market, and it is very difficult for SEBI to control everything. So hence they try their best to control the market, and these are some of the flaws that can happen in the market. Okay. Now given the above objectives, it becomes imperative for SEBI to regulate all the entities which are involved in the stock market. All the entities mentioned below are directly involved in the stock market. Malpractice by any of the following entities can disrupt what is otherwise a harmonious market in India. Okay, of course, fear as well as greed can drive anyone and have a lot of ups and downs. So SEBI has to be very strict with them. Okay, SEBI has prescribed a set of rules and regulations for each entities. The entity should operate within the legal framework as prescribed by SEBI. Okay, the specific rules applicable to the specific entity are made available by SEBI on its website. Okay, they are published under the legal framework section of the site. So this is some of the rules you can check. Okay, we will elaborate on some of these market intermediaries in the next card. Okay, we will just move to the next page, and then market intermediaries. So what is written here? Yes, many corporate entities work in tandem to ensure transactions in the market flow smoothly. See, so much transactions in the stock market can lead to glitch sometimes in the broker's system. Okay, so therefore sometimes the up and down can make a heavy loss for either retails, it can happen both the FIIs and DIIs also. Okay, so it is just a common thing. That's why SEBI is here to make rules and regulations. Okay, right from the time you log into the trading terminal, let's say to buy share, to the time this share hit your demat account, market intermediaries work seamlessly together to ensure your transaction flow without any hiccups. Okay, these entities play their role quietly behind the scene, always compiling with the rules laid out by SEBI and ensuring an effortless and smooth experience for your transaction in the stock market. These entities are generally referred as financial intermediaries or market intermediaries. Okay, together these financial intermediaries, yes, these financial intermediaries interdependent on one another create an ecosystem in which the financial market operate. Okay, let us quickly review a few of the key market intermediaries and the role they play into the ecosystem. So now they are going to the role and trying to explain us. So by this we will end the card. So this is the topic we are going to cover here, the stockbroker. Okay, the stockbroker is an important topic here. Okay, stockbroker like Zerodha or Angel or Grow, etc. Okay, the stockbroker is probably one of the most important financial intermediaries you need to know. A stockbroker is a corporate entity registered as a trading member with a stock exchange and holds a stockbroking license. Okay, license is important. SEBI grants the license to due diligence, and the broker is expected to comply with the rules prescribed by the SEBI. Okay, that's the important point. A stockbroker is your gateway to the stock market to make investments in stocks, bonds, ETFs, and mutual funds. To transact in the stock market, you must set up or open an account with a stockbroker of your choice. Many stockbrokers are registered in India, and you can choose broker based on a personal criteria. A few popular filters based on which people select the stockbrokers are: simplicity of the platform, of course, the efficiency of the broker support system, of course, without any glitch. If they are maintaining the system, then it's a good stockbroker. Access to ready reports, profit loss reports, trade books, and tax, etc. So all of these should be in a very clear statement which is very understandable by a common person or layman. Okay, broker's net worth: you don't want to deal with a broker who is not profitable or does not have a good PNL. Of course, that is the important point. Okay, initiatives like education, they also have to produce initiatives. See, for example, varsity is done by Zerodha, which is a very good platform to understand the basic levels, and I'm trying to explain all these topics through varsity. Okay, once you decide on your broker and open a trading and demat account, you can start transacting in the stock market. After setting up your account, there are few standard ways to interact with your broker. Okay, you can call your broker, identify yourself with your client code, and place an order of your transaction. These are old days. Okay, the dealer on the other end will execute the order for you and confirm the status of the same while you are still on the call. Okay, do it yourself. You can do it yourself nowadays. It's very easy. This is perhaps the most popular way to transact in the market. The broker gives you access to the market via a trading terminal. After you log into the trading terminal, you can view live price quotes from the market and place orders yourself. For example, Zerodha's trading platform is called as Kite. Kite is a popular one. Okay, and also advanced users can access the market programmatically via APIs. Some of the brokers provide API for a free. Okay, so these are for advanced players. Okay, and the essential services provided by the broker includes access to the market and allow you to transact. Okay, margins for trading, we can discuss this at a later point. This is an important point, and then we have to focus on those margins really very carefully. Okay, support in terms of call and trade, help you resolve queries, educate you on markets. Zerodha is doing that 100%. Okay, issue contract notes for the transaction. A contract note is written confirmation detailing the transactions you have carried out during the day. Of course, this is important. Facilitate the fund transfer between your trading and bank account. This is very important point. Provide you with a back office. The back office is a portal to access many reports about your account. Zerodha's back office is also called console. Okay, the broker charges a fee for the services provided, also called as a broker's charge or just brokerage. Okay, brokerage is important thing. You have to know about the brokerages even for transaction, for delivery stocks, or if you are doing trading. Okay, the brokerage rates vary, and it's up to you to find a broker you think strikes a balance between the brokerage charged and the service provided. I think we have come to the end. Okay, the next part we will cover in the next video, guys. Thank you. Stay tuned to my channel for more updates.